Al's founded 3 significant companies and has some great stories and some great experiences. I always learn a lot from this. I also learn a lot from just get together and have a breakfast with Al and talk about what he's done. But let's go back in time. You're not originally from Chicago. You're actually from a long way from Chicago originally. Talk about where you were born and the early years of your life.
Sure. By the way, thank you for having me, and I get to be amongst friends in the city of Chicago, so there are a lot of friends in the audience. It's exactly that with Avant people, so hopefully they'll applaud to my to the jokes and they'll be good viewers. So yes, I was born in the former Soviet Union, and my family immigrated to the north suburbs of Chicago in the late 80s, and I've been in Chicago pretty much ever since.
So you were from Uzbekistan?
From Uzbekistan.
How old were you when you moved to Chicago?
So I was 8 years old. My wife, who actually happens to be here, is from St. Petersburg. She doesn't need Uzbekistan to be a proper place to grow up. So she thinks that St. Petersburg is a more sophisticated former Soviet Union.
Well, we're not touching that one, so we'll go. Yeah. So you move here, and you've clearly been, even at a very young age, very prolific entrepreneur. What was your interest? Did you have an interest in technology? Did you get interest in entrepreneurial things? What were the things that someone grew up next door to you or a classmate they'd say, oh yeah, I can see how Al had. What were you like?
So interesting. My older brother, who was 5.5 years older, was actually my co-founder in my first 2 companies, and he's a world-class software engineer. Spent 7.5 years out in the valley working for Siebel Systems. Now has his own company. He's the technologist in the family, and he had. When we came to the U.S., we had no money. He was the one convincing my parents to buy the Commodore 64, that he was writing code, and I was out playing football with my friends. And I think what probably my parents would say is the fact that I couldn't hold the job down for longer than a month until college, where the only job I was able to hold was a job at a bar. That maybe that was a precursor to future entrepreneurship.
Yeah, so you were an athlete, you played sports a lot in high school.
Yep.
It's not exactly what people would assume using technology. So what happened along the way? You go to college, and what did you major in?
Finance and math.
So finance and math, and weren't you, I think at one point you said to me you were a little bored with math.
Well, no, my math professors would make fun of me because I'd be the only finance kid in those math classes. But to me, in retrospect, I wish I did more math and computer science, maybe a little less finance, just given where the world is going.
So what drew you to finance? What was it? Was you a business person? What was the deal?
Yeah, I didn't really know. My brother was older than me and had graduated. We went to Siebel Systems in 1997, rode the first tech bubble up, and I was sitting in college and I felt like I needed to do something to just keep up with the Russian Jewish family, where the bar is very, very high. And finance to me at the time seemed to be the place to go. And I didn't know what investment banking was. I didn't know what hedge funds really were. But that seemed to be the industry that was exploding.
Right, so it is the 90s when that was happening. So you went to one of the great ones. You went to Deutsche Bank as an investment banker, New York.
Yeah, so I actually got hired in Chicago, and then investment banking is an up and down sector, so my job got relocated the day before I started to New York.
So talk a little bit about what drew you to that. What did you take away from that? How long did you spend as an investment banker?
Yeah, so I really didn't know what I wanted to do growing up. I thought I was going to follow a more traditional path, which is a couple years of investment banking, maybe a couple years of private equity or hedge fund, maybe get an MBA. And I think just the allure of Wall Street was exciting, and Boiler Room and all these different things that we watched on TV. So I loved investment banking for the 14 minutes or so that I did it. In truth, it was about 14 months. And I was in New York, I was in the heart of it all at Deutsche Bank, working 100 hours a week. But I was
what years were
this was 02, 03.
Okay, so it was after the bubble had burst. Still a student.
After the bubble had burst, but I was working in leveraged finance, which was for Deutsche Bank. They were the preeminent bank in that, which is basically high yield bonds and bank financing for companies. And it was on fire. All we did is work on live deals, which in investment banking is what you want to do. And I was learning so much for the first 6 months. And then very quickly, it became a process environment where you would spend your time marking up a presentation, you give it to your boss who marks it up, gives it back to you, you do it, and you kind of do that for a long time until about 3 in the morning. and then you come back at 9 in the morning and do it again. So it just, I think the learning experience plateaued very quickly.
Well, good news is, working in an investment bank, you work out 4 hours, so you already know how to run at that pace.
No, when I left, it was because one of my mentors and the guy I interned for at a trading company when I was younger told me that, why don't you come and take a 90% pay cut to work only 80 hours a week instead of 100. It was a great sales.
So here you are, working at a bank, you're making a lot of money for a young guy, working hard hours, but it's exciting, it's going on. And, you know, the most common move isn't in 2002, 3, 4 to go become an entrepreneur. If anything, that's what we talked about in tech entrepreneurship, was nuclear winter. So you clearly had your own true north that was calling you. Talk about the decision to leave banking, not to leave banking, but what was it that drew you to starting a company, and talk about the genesis.
Yeah, so I always wanted to do something on my own. I think I didn't do it when I was in high school or college necessarily, but I think one of the reasons I had a hard time holding down a job is just problems with authority, which in my experience is common amongst entrepreneurs. And because you always think that you're right, and being subservient to somebody else's authority is a difficult, situation to be in. And so I had an amazing opportunity because David Short, who's my original co-founder, he was a mentor of mine, and I was trying to figure out what to do. I was actually buying real estate on the side where he was going to be my investor. He was the one that said, let's just do something together. And at the time, all he said was, I have $1 million of my own capital. I'm willing to commit to an idea. I don't really know what the idea is yet, but for me at the time, $1 million, oh my God, it's the largest amount of money I could possibly imagine. With $1 million, we can build anything. And the downside was pretty simple. I would end up in business school, which is where I was going to end up anyway. So we kind of tried to come up with an idea that made sense.
So how did you come up with the idea that became Innova?
The idea became Innova.
So we'll talk about Innova in a minute. Where did the idea come from? Talk about the genesis of the idea.
So we actually didn't start as a technology company. We started as a brick-and-mortar financial services center based in Kenosha, Wisconsin. So I left investment banking to go and drive up to Kenosha every morning at 7 in the morning and come home at 9 p.m. at night. So my hours didn't change that much from investment banking. But the idea was pretty simple. The savings and loans had left the sphere through the savings and loan crisis, and banks started to really pull back from providing small dollar credit to consumers. And so there was this massive hole that was forming.
And how did you see that? I mean, it makes a lot of sense, but what gave you, how did you see that opportunity? There's a lot going on.
So originally we were looking at different ideas, and Dave, who's my co-founder, had a friend of a friend that had these financial service centers in Arizona that were doing well. And so we just started looking at the category. And we did a whole bunch of research, built a business plan.
So the original business, if I were reading the original business plan right here, what would it have said? What would it say?
It was Innova, but in the brick and mortar setting. So we would open locations.
Like a rollout of each sort?
Yeah, we would open up 200 locations over the next 5 to 10 years that would provide the services that Innova provides, which is credit to small dollar.
What was the experience like when you became an entrepreneur? It doesn't sound like it's glamorous, and obviously a lot of hard work to learn it. Share what it was like going from Deutsche Bank to Kenosha. What was that experience like? And just give us a little flavor.
Yeah, it was a culture shock, for sure, because I had never really, I worked in retail when I was younger, but I never really understood retail. I didn't realize what it takes to manage significant amounts of cash in a retail setting where you really have to trust. And when you don't have any people to trust, you have to do it all yourself. So I opened and closed the first store 7 days a week for 3 months. And this was 7:30 in the morning till 8:30 at night, hours up in Kenosha, Wisconsin. It was I think it's the first realization I had that being an entrepreneur is substantially more challenging than being an employee, just because you can never sleep, you can never give it up.
So you're there and you're in Kenosha. It's Saturday night. Your friends are out drinking beers in Chicago. Your friends in New York are, there's a big thing back in the day where they had anything, they used the limos.
Yep.
Limo races and go to bars and all this. They're calling you and being like, hey, we're out, we're on the Upper West Side, and you're there in Kenosha doing this. Did you ever think to yourself, what am I doing?
Oh, all the time. The best was the first time I went back to New York, and we would go to Little Italy when I lived in New York, and we went back and I'm like, man, I just can't afford this. It was definitely one of those rude awakenings where you have to commit. It's like, do I really want to do this, or do I want to go and work in investment banking or private equity?
So were you able to make the model work? Do you feel like you had the model now?
So the first location, and this was hard to solve.
By the way, just to be clear, in formula rollouts, getting the model right was the equivalent of product market fit. So this is like a product market fit question. We cover every time to a physical location.
100%. So that's why we wanted to do one. We wanted to make sure we did it right. And so
What did you think going into it, and what did you learn was different than that? How about finding product market fit in the location?
Well, I remember an interesting story. So we opened January 8th of 2004. So I quit banking in October of 2003. We opened in January in our first location. It was just me and my partner there. We had a soft opening. And all of a sudden, a bunch of people actually just showed up and lined up. And we didn't know what to do. We didn't know how to provide credit. We didn't know what the underwriting was. We were just so excited that people showed up. So we gave everybody a loan. I'm very certain 100% of those loans defaulted. So it was just the fact that we got it open, we got the leads, got the build out. I spent way too much time thinking about the right legal structure because that was my background. And in retrospect, I probably should have spent a lot more time thinking about how to make loans. But fairly quickly, we figured out the product market fit. The first store became profitable within a 2 or 3 month span.
What was the non-intuitive insight that you really know? Something you didn't know, talking about it on a business plan, but when you're on the ground with it.
And I would say credit. The realization that in the lending business, it's all about data and analytics and how you actually underwrite consumers. Because at the time, we kept thinking, it was like, okay, are people going to come and can we provide them credit? We forgot the part about how do you actually figure out who to lend to and who not.
So was it easier to get applicants than you expected?
Initially, yes. But again, none of those applicants paid. It was much more challenging to figure out who was a good credit and who was a bad credit. And in the absence of that analytics and capability, you can't provide good rates to better quality consumers.
How'd you solve it?
So we spent a lot of time, and I spent a lot of time personally just looking at data and analytics, looking at correlations, going back to my math background, which I didn't think was that useful at the time, and building really basic regression models to try to figure out, okay, who in fact is going to be likely to pay, who is not going to be likely to pay. How do you?
So where did the data come from? Was it just your store, or were you able to?
So initially, it was just store data. It was really basic, and even when we ended up migrating online, which I know is coming out, we went back to store data as the basis for our first model.
What was the radius like? Are those stores, are they hyper-local or broad?
They're pretty local, and the challenge in that business is you point out Blockbuster and Hollywood Video, there was a war for locations. And all the big companies, some of which had gone public, were just fighting for the best location in retail. It's all location, location, location.
It's interesting. That was a big shift that changed the ballgame.
For sure. So we actually opened a second location in Racine, Wisconsin, which was even further from where I was living at the time, which was at my parents', because I couldn't afford anything. And because the first location was doing pretty well, so we opened the second location. And at the time, we had a website, which was a really basic website. My brother, who was the tech wizard, helped me put it together. It was really, really basic, but we started to get applications via the web. And people would come into the store and ask us questions like, why can't I just apply online? Why do I have to come into the store?
Interesting.
And we would start to get more applications online just from really basic marketing, putting the website onto the marketing we were doing onto a billboard. We fairly quickly realized that there was potential in just eliminating the brick and mortar and going online. But
Really, really interesting.